hit the subscribe button, hit the bell icon, hit that like, comment, and share button. Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show as always. This is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. So in this video, we're going to be talking about DoorDash filing this IPO, and we're going to take a look at it. We're going to talk about why should I care as an investor about an IPO? We're going to talk about what is an IPO and how to look up an IPO. So with this being said, with something I learned over time, I thought that you couldn't really look at the finances until the company actually was publicly traded. So right now, DoorDash is not publicly traded, but right now they're filing up, they're doing the paperwork to become publicly traded, and you can look at that information. So the first question people always ask, man, why should I care as an investor about a company filing an IPO? An IPO is initial public offering. This is the first time the company is going to the public to raise money from investors. Now, two big reasons why I care as an investor. First, I'm looking for an opportunity because now I can look up the finances of the company, read about the company, and to see when this company goes public if I want to buy into it. The second part is I can compare it to its competitors. So for prime example, everybody out there knows that I'm an Uber investor. So when I see a potential competitor going public, I want to see what their finances look like. Because if you remember, Uber tried to buy DoorDash for $2.5 billion. The deal fell through. They ended up buying Postmates for $2.5 billion. So the first thing is, why should I care as an investor? Because Uber also has Uber Eats. I want to compare Uber Eats to DoorDash to see if I'm getting my money's worth, right? So now the first thing we're going to do is we're going to take a look. We're going to take a deep dive. So let me see what you guys and girls are saying in the comments before we do that. Hey, how you doing there, Miss Ruby from Memphis, Tennessee? Miss Ruby there from Memphis, Tennessee. The one and only hello. I'm wondering, how do I invest before they go online? Now, right now, a public offering means when it goes to the public, and when the public can buy it, price will probably run up in the beginning. I never buy IPOs. It's a bunch of gas. I'll wait till people get out of them. Then I like to get in. But right now, it's a privately held company, and it's the only way you can buy into a privately held company is unless you kind of know somebody or they do a private offering or something like that. Usually, it's the founders of the company, people that work for the company. Those are the ones who get the private offerings versus whatever the case may be. But if I did know how to get some private shares, I would get them. But there is a company out there called Start Engine that allows you to buy a privately held company. Unfortunately, DoorDash is not one of them, right? So Big Al, what's going on, Al? He says, what's up? The Prince of Investing. What's going on, Al? So let's take a look at it. Let's take a look. So something I learned over time, when a company has its IPO, you can take a look at it. So let's take a look at their finances, right? Let's take a look and see how they look. So here we go. Right here, I have pulled up what is called the S1. This is the S1. This is the initial public offering for not Uber. Y'all got me thinking of Uber, but for DoorDash. So DoorDash here, this is talking about the company, what they're doing. But the only thing I care about is their finances. What does their finances look like, and how does it compare to Uber Eats? The thing I like about a company that goes public is that anybody can look up the information. Right now, they're saying they have plus 18 million customers, 390,000 merchants, and 1 million people that are doing DoorDash, the number one in U.S. category shares. So you have the CEO story. He's telling you how he was an immigrant from China, and he watched his mom was a doctor from China, and she ended up starting her own practice. So it kind of give you his own story, but I don't care about that. I like to look at the finances. Show me the money. So here we go here. So they reported in the end of 2020, they had a revenue, top line revenue right here at the end of September 30th of 2020. They reported $1.9 billion in revenue. They was at 587 million, and September last year. So their revenue almost doubled, their top line revenue. That's pretty nice. So when you look here, when you look at their losses, they've been a losing company. They lost in 2018. They lost $204 million in 2018. They lost $667 million last year, and but they're closing the gap. Right now, they're only down $149 million, so they're losing less and less company. Will this company become public? Let's keep an eye on it. So when I look at stuff like this automatically makes me want to look at Uber. How does it compare to the companies that are already out there? And as y'all come in, hit that like button, thumbs up button, that share button, tell all your friends and things like that. So how does it compare to its competitor? Number one in the industry right now is Uber. Uber owns Postmates. It purchased Postmates, and it has Uber Eats. How does it compare to Uber? Why do I care about Uber? I always compare you to number one. For prime example, I had a friend of mine. He was over at my house the other day. He said, Prince, how do you think you compare to the people in Denver? I said, well, I don't know, because I don't compare to myself to the people that's in Denver. I don't even compare myself to people in Colorado. I compare myself to the best in the world, right? Which is a Warren Buffett or something like that, right? So right here, this is Uber's latest they put this out. This is their 10Q report they put out about a month ago. No, a couple weeks ago, Uber earnings came out. So right here, you're seeing delivery revenue. So right here, Uber, so you got mobile. Mobile is getting a ride. When Uber, somebody pick you up and drop you off. At the end of September, the same period, they reported $4.6 billion just from getting rides and revenue. Then you have delivery. Delivery is Uber Eats. It reported $3.4 billion in revenue. So Uber Eats alone made $3.4 billion, right? And at the end of September, their freights made $698 million. And all the other revenue was about $35 million, bringing their revenue to $8.9 million. So Uber Eats by itself made $3.4 billion. When you're looking at DoorDash, when you go back to DoorDash, they're telling you they only made $1.9 billion. So revenue alone, this is telling me that Uber Eats is almost doubling what DoorDash is doing. That's very big. So, ladies and gentlemen, you can see that you're comparing this. How does DoorDash compare to Uber Eats? You look at just Uber Eats, not delivery, because the thing I like about Uber makes its money three ways. As you can see, you have Uber Mobile, where they give you a ride. You have delivery, where they take your food. Now they're doing groceries and pharmaceuticals. Now they have freights, right? So DoorDash is making its money via one way, where it's almost like, what's the other company out there? Lyft. Lyft makes its money just from rides. DoorDash makes its money just from delivering food. So when I look at the delivery service alone of what DoorDash is reporting is not even in comparison. Let me pull it back up for you. This is why it's very important to collaborate and to look at, well, how does this compare to my current investment? So right here, you can see it for yourself. Their revenue is about $1.9 billion, which is cool, but Uber was like $3.6 billion just in Uber Eats. So down here, they're netting a loss of $1.49 million. And you got to think about it. You notice Uber Eats is what's carrying Uber right now during the pandemic. So right now, DoorDash is having a hot season. So remember, when everybody said, Prince, which one you like, Uber, Lyft? And I said, well, I like Uber because it has more than one way to make money. Facebook makes its money via one way. 98% of Facebook revenues come from one place, which is running ads. But Uber itself, it has Uber Eats, it has Uber, and then it also has freights. So when the pandemic hit, when COVID-19 hit, you seen Lyft lose money. You saw Uber its mobile side giving rides, it lost a bunch of money. But the thing that was able to carry them was Uber Eats. So right now, DoorDash and Uber Eats are having a great time. And then Uber went off and brought Postmates. It's having a great time. But this is a hot season when we're probably about to go back in a lockdown. We just came out of a lockdown. So that's where you got to look at it. All right. So now you're going to ask yourself the question, Prince. That's why you have to look it up. We took a look at it or whatnot. And we talked about how to look up an IPO. An initial public offering, Prince, how do you get all this information? Do you are you in the Illuminati? Do you know somebody crazy? No. When you file an IPO, an initial public offering, you file it with the SEC, the Securities and Exchange Commission. You go to sec.gov, you type in the search box DoorDash, you look up the S1 report, and right now you can look up their finances. Even though they haven't gone public yet, you can look up their finances. I can compare like DoorDash. If I see DoorDash go out there and trade for $50, $60, $70, that can be an opportunity to buy put options. Prince, why would you buy that? How does Uber's trading for $40 but makes 3 to 4 times more money as you? So that tells me you're overvalued. The second thing is, if we do get off this lockdown thing, how would DoorDash fare up? DoorDash is a one-trick pony, just like Lyft. Lyft would do well when we get out of lockdown. Uber would do well when we get out of lockdown. But since we went into lockdown, I see them making money from other ways. So you go to sec.gov, you look it up, and you can tell right there. You can type in DoorDash, and you can pull up the finances of the company and to see everything they have going. So let me take a look at what you guys and girls are saying in the comments. Oh, let's see here. Matrix 808, what's going on? 808, you in Hawaii? You're saying bands up. What's going on? What's going on out there? Max B, that's my guy, Max B out there in Washington. He said they can't touch Uber. Yeah, when it comes down to revenue, that's what it's about. Like Warren Buffett said, he always says, when you look at a company, look at buying the whole company. For prime example, if your company makes $10 million a year, and you get traded off of and you get brought out by a 2-point basis, that means somebody's evaluating, they're going to buy your company for $20 million. The people buy your company off of revenue. So I look at revenue. So look at revenue. Yes, they can. Here we go. Here we have Josh. He said, here from Chicago. Man, I've been longing for some deep dish pizza from Chicago. What's going on? Michael out of Canada. He says, lemonade, brother. That's my guy, Michael, right there. I still got my eye on lemonade. I haven't pushed the button yet on lemonade. Beverly, how you doing, Miss Beverly? Beverly from St. Louis. And I always get Miss Beverly and Miss Ruby mixed up. Ruby's from Memphis, Tennessee. We got Beverly here from St. Louis. Okay. Look at Miss Lucky's mom, Jacksonville, Florida. She's always in here. Look at that smile on her face. I know she's smiling because that Southwest airline is doing pretty well for her. Who else we got in here? I can't say your first name. Mr. Somerville. He says, what's up? What's going on, Mr. Somerville? The one and only. How can we find information about companies' revenue? Everybody in the comment box, tell the one and only, he's probably new to the show or a casual listener. How do we find the revenue of a company? How can you look it up? So companies, how do you find the revenue of a company? A company has to report their earnings every quarter. So a 10Q report is the quarterly report. A 10K report is the 10K report is the annual report. So every quarter, company must report its earnings. So you can look up sec.gov. You can use Yahoo Finance. You can use E-Trade, TD Ameritrade. Some people love to Google them or whatever, but I love to go to sec.gov because I know they have to report it there. Or whatever company you're trading, just type in Uber Investor Relations, DoorDash Investor Relations, Microsoft Investor Relations, Google Investor Relations. Up under Investor Relations, go to Finances, and you can look up their finances. Because if you're a publicly traded company, you're taking money from the public, you must be transparent with the public. That's how it goes. Robert Reed, what's going on? He says, let's get it. Okay. Robert Reed says, how will we know when they drop or hit the market? Oh, you'll definitely know. It'll be a big thing. I didn't see the date. I didn't see the projected date. But you'll know it'll be a big thing. They'll do a big marketing push because they're trying to market themselves because they're here to raise money. They want people to buy into their company. So you'll see when they drop, when they hit, I will definitely be watching them to see how they perform. But you'll definitely know. I don't have a date on me. I didn't look up a date, but, you know, it'll be all over the place. What is the one stock you think is going to explode soon and no one is going to see you coming soon, right around the corner? I can't really say. One of the, you know, I'm not a trader, like a day trader, but the two industries that I can see having a great year, I think that Uber, if Uber can become profitable by this time next year, it would explode. when they become profitable. If DoorDash becomes profitable, it's going to explode. Another one that's around the corner, I think green energy is definitely a way you're going to make some money there. I'm investing into green energy. The tech companies are still doing their things. I can't think of the other companies I had. Oh, I think ammunition is going to explode too. I think ammunition is definitely going to explode. So look into those as well. That's one I can think off the top of my head. Duma, she said, hey, Bay Area, what's going on? You know, I was telling somebody on the show the other day that I've never been to the Bay Area, and that was a lie. I was in the airport. I've been to the airport in the Bay Area, which was like one of my favorite airports to go to. I was in San Francisco in the Bay Area a few times, and I had some long layovers, and I have gone to the Golden Gate Bridge and some stuff like that. But I don't know a whole lot of stuff to do in the Bay Area. What's to do in the Bay Area? I've been to the Golden Gate Bridge, and I think I went out there and got something to eat. I think I rode one of those little trains that go down the middle of the road or something like that. But I have been to the Bay Area, so excuse me, I have been to the Bay Area. I have told people I have never been to the Bay Area until Facebook reminded me, put up a picture of me at the Golden Gate Bridge. I'm like, wow, I do remember I had a layover in San Francisco. So how you doing there? Thank you for checking in. There you go, Mr. Briggs, Senior, Greensboro, North Carolina. How you doing there? Thank you for checking us out. Arthur Butler, he's from St. Augustine, Florida. Okay. Thank you for checking us out. Thank you for tuning in. Donut Tech, if someone was to give you $10,000 and told you to invest it in one company, what company would you invest it in? Ooh, if I had $10,000 and I had to invest it into one company, what company would you invest it in? To me, it's a no-brainer. And I had to invest for the future. If I had at least 5 years, I had to put my money in one company, and depend on my risk level. If I was going to be moderate, I'll probably go with a Google or Apple. If I want to be on the higher risk side, I would give somebody in the electronic vehicle green energy space. It would probably be either Enphase, Tesla, and I got my eye on those electronic vehicle companies out there in China, the XPIV and what was the other company name that dropped the other NIO, XPIV. I keep an eye on them, but I would go with an American-made growth company. It would be either Tesla, Enphase, Apple, which is a good sturdy dividend-paying company. It would be an American company, profitable with a crap ton of money that I feel is going to grow for the future. So it'd probably be somebody in tech, green energy, American company. I would narrow it down from there. Robert Reed said, I like Ford, General Motors, too slow for me. I need somebody with a little bit more spice. Robert Reed, I'm not into the build. They do have a lot of growth potential. They can bounce back. They can make it. But until they do that, I'm not messing around with GE or Ford. I have held them in the past, but you know, I'm in the accumulation phase. So you're in two phases in life. Either you are accumulating or you are trying to conserve. Accumulating means I'm trying to accumulate as much wealth as possible. So when I'm investing, I need something that's going to grow. And if I'm looking for the conserve phase, that's the phase I have made my money and I'm trying to live off of it. Then, you know, in the accumulation phase, I'll be looking at stocks, real estate, be a little bit more riskier. In the conservative phase, that's when you move to things like gold, annuities, things like that or whatnot. That's what I'll be looking at. He said, NIL. What's going on, Gregory Thompson? PLTR. We looked at that company one night. She said, I'm looking at SBE for EV stock. Okay, I'm not sure about SBE. He said, I'm definitely putting Max B said, I'm definitely putting 10K in Amazon. American Weed. Yes, yeah, it would be one of those growth companies. It'd be the top. It have to be Apple, Amazon, Amazon, or it had to be electronic vehicle. Weed right now, I don't know. I gotta watch weed some more. I gotta watch the marijuana industry. I gotta watch it formulate some more before I would put money into it. I gotta see it get profitable. Why would I do marijuana when I got Amazon already making money, dominating the world? I definitely wouldn't choose marijuana over Amazon if I had 10K to invest for 5 years, because I don't know which marijuana company. Yeah, I know the industry would do well, but there's not a marijuana ETF that I know about. So I know it would be here. It would do good, but I can't see. I can't see it right now. Not with all these big companies making money and grow. Gregory Thompson said, I think he meant dropped. I cropped a few hundred shares of PLR. Copped. Okay, my bad. I copped a few hundred shares. Look, that sound all corny. I copped a few hundred shares of PLR recently. They're really hard to get into as engineers. So they have top talent on par with FANG engineers. They have some deep ties to governments. Okay. I'll look into some PLTR. So what he's saying is the FANG is Facebook, Amazon, Apple, Netflix, and Google. And he said they have top tier people and they got some ties to the government who has deep pockets. So let's take a look. We'll take a look at that one. Not tonight, though. I got to get running. I wanted to look into that DoorDash IPO so you guys and girls can look it up. Okay, that's the company. Chemical, he said no. So, yes, I don't know what he meant by that. Oh, somebody says, no, don't touch SBE. You hear that, Lucky's mom? They said, no, do not touch SBE. So, SBE, that's the EV company, electronic vehicle. So, that's a cool part. But today I want to keep it on topic, and I want to show you guys and girls how to look up DoorDash filing for an IPO. They're not publicly traded yet, but we're looking at their revenue. I'm comparing their revenue to Uber Eats, and I want to see what price they come out. And if they come out at $50, run up to $70, that could be a great opportunity to buy put options. Uber did the same thing. Uber came out at $30 and ran up to $50, and then it dropped down to $25. That's when it got on my radar. So I'm projecting DoorDash to do the same thing. It has a big name. It's popular. People will buy a bunch of it. I think they'll probably run the price up to $50, $60. Its first quarter is going to come out, and I think it's going to suffer. That's my business. But anyway, ladies and gentlemen, I got to get out of here. I got to grab something to eat before it gets too late, and I got to make some phone calls. So thank you guys and girls for tuning in. I hope y'all got something out of this episode. If you did, don't forget to tell your mama, brother, cousin, sister, and friend how great the show is. And hit that like button, subscribe button, share button. And until the next video podcast, cartoon, or whatever else crazy you see me doing around the globe, peace, be safe. I'm out, and thank you.